everyone, welcome to our channel. I'm Jackie Hurtis and I'm a residential mortgage lender.
I'm Sasha Qualkenbush, a real estate attorney.
I'm Shannon, a real estate agent and investor.
I'm Brian Tanquilut. I'm a healthcare stock analyst for a Wall Street firm. And today I'm here with...
The Property Queens!
Guys, we are so excited today. We have Brian here with us. He's a stock analyst, regularly featured on CNN, CNBC, Forbes, Wall Street Journal. Most importantly, the Property Queens.
And we wanted to bring him in, kind of talk about pros and cons of investing in the stock market versus real estate. He's starting to dabble in rentals himself, so we just kind of wanted to get his take on everything. Is one riskier than the other? Why you would choose stock market over real estate or vice versa? Just kind of all that kind of stuff. So can you kind of tell us a little bit about yourself and how you got into the business?
Sure. First, thanks for inviting me. I'm really excited to be here to be part of the show. But so I'm a stock analyst. I pick healthcare stocks for a living. What I do is basically give advice to people who run 401ks. You know, if you put your money with a 401k manager, they come to guys like me and ask which stock should we be buying and selling. So I pick healthcare stocks and put buy ratings or sell ratings on them. So I get to know a lot of these companies in very, very great detail, and that's how my investing strategy starts. Now, I've been a resident of Nashville for, almost 20 years now, and have seen the growth in the city. And through that time, I've invested in real estate one way or the other, whether it's buying my own property for residential reasons, or also as investment as rentals. And as I've seen the city grow, I've gotten to see more opportunities, especially in the last few years, to really invest and take part in the growth of the city. So right now, just to your question, Jackie, as I think about real estate versus stock market, obviously the stock market has been hot in the last couple of years, but from where I sit, what real estate brings to the table is diversification. You don't want to put your eggs in one basket. The stock market ebbs and flows. Same for real estate. So it's always good to have your money in different little buckets where if one is not working that well, hopefully the other is holding up better than the other. Especially if you're a long-term investor, I think that's a very good strategy.
Okay.
So right now, what, in terms of the stock market, are you in like the money market, commodities, what are you trading?
So right now, stocks are doing really well right now. And I think it's just a function. It's a function of, the U.S. economy is doing pretty well. And also interest rates are really low. And I think you see that as well in your business and real estate, right? Where those two factors are helping the real estate markets. So I'm pretty bullish on the stock market near term, but at the same time, again, as a personal investor, I'm starting to think about, what do I need to add to my portfolio? And one of the things I'm thinking about is income and passive income. It's part of retirement planning in a way for me. And so that's why I said, I need to pull some of my own capital out of the stock market into something that is in a way easier. Because I think one of the things that people don't appreciate enough about the stock market is that if you're picking individual stocks, it's a hard thing to do to be successful. It's almost speculative and it's almost a gamble. Because to really know what stocks to be buying and selling, you got to do a lot of work that the average investor does not have the ability to do. And so I think real estate is, I'm not saying it's easy, but at the same time, you have professionals like yourself, Shannon, that are more accessible that we can go to and say, okay, I need help understanding the Nashville market or whatever the market may be. So I think that whole diversification strategy is important, even though the stock market right now is still doing pretty well.
Okay. So would you say overall, for someone who knows nothing about either, that real estate's generally easier to kind of be a safer investment in a way?
I would say, the first thing I tell people is if you have some investable money, the first thing you should do is invest in your own personal residential property, because there's zero return on rent, right? Versus if you're building a net worth, even though real estate prices might come down, you're still building equity in that property. So I think that's the first step. Now, if you have excess capital to invest, I think, again, a diversified strategy of putting money in different buckets is good. But I like the idea of real estate because it is passive income over a long-term period where, whether it's 15-year mortgage or a 30-year mortgage, I can put money there with, the access to capital is pretty easy. You can talk about that, Jackie. Leverage is easily available. And it's a multiplier effect, right? So that's one of the things that you can do. And And frankly, I think people tend to forget that if I have rental income, as long as it covers the cost, whether that's interest expense, taxes, I honestly don't care what the value of the property is year in and year out. Because in 30 years, I own that property 100% with my 20% or 25% down payment, right? So I think the ability or consistency of generating returns is pretty good in real estate without having, it's more passive in the sense that you don't have to think about it every day. Whereas the stock market can be more volatile, and I think that on a day-to-day basis, you have to watch your stocks, which the average individual does not have that ability or time to do that and watch their stocks and understand what's going on. So.
Right. Or you'd have to just hire someone to do it, but then you have that fee that you have to pay them.
Exactly.
Things of that nature.
Exactly.
I don't know if you know this, my mom's a day trader.
See, if you're a day trader, like you almost have to, I mean, you're watching it all day, right? Yes. I think that's what she does.
She has like 4 computer
Screens.
monitors and her TV going like all day,
Yeah.
and she's sitting there trading, and she's in a group all over the world. So she has someone in India, the UK, Australia, and somewhere else, but there's like a group of 10 of them, and they sit there and Skype all day, and you can hear them yelling about the commodities and what to trade, and they're like, sell, buy,
Right,
and
exactly.
You can just hear them.
So it's
hilarious.
like you have to, it has to be a full-time job if you're investing in individual stocks. And that's a hard thing.
So Brian, how did you get started in stock trading?
So I actually moved to Nashville to go to Vanderbilt to get my MBA so many years ago, and one of my goals in doing that was really to get into Wall Street. From the get-go, that was the reason that I went back to business school or to grad school. And when I graduated, it was one of those hard times, recession, and the only job that I could find at that time, literally I got the job right the day of graduation, was to be in what we call equity research, which is picking stocks. And I had no idea if that's what I wanted to do, but I'm like, I just need my foot in the door. And so many years later, I'm still doing it. And I'm loving it. And as I look back, I'm like, I should have gone after that specific job from the get-go instead of all the other Wall Street jobs that I tried to chase when I was in grad school. And then, just from there, having lived here in Nashville, just to take it a step further, I had classmates in grad school who actually, so I graduated in 2003, and I had classmates who saw the opportunity in Nashville, and a couple of them were the first developers of condos in town. Straight out of grad school, they were able to raise money, and part of it was they were literally hitting up everyone in the class saying, we need investors right off the bat, not a lot of capital up front, just we need the banks to sign off on this. And so people from my class we were buying up condos that were not built back in 2004, 2005 timeframe. And it was fascinating just seeing, what is now the Gulch, Midtown, and all the investments that we had made at that time.
Really? That was like,
yeah.
what you're...
So think about the Bristol on Broadway. 807 18th was actually the first condo development in Midtown. And then the Icon in the Gulch was also being built. And then that got me introduced to people in town, like lenders, who, it's fascinating how knowing the right people, especially in a town like Nashville, opens the doors for you. Lenders, I had lender friends who said, hey, we've got new developments here. So I was one of the early buyers of the Adelicia. And then I got to know some of the guys there. And so it just snowballed into knowing people in the real estate market locally and also knowing the properties and understanding how the local market works. And, I say I got lucky that I was here when Nashville wasn't what it is today. And I got into the real estate market quite early. So it's been a fun ride. It's been fun watching just how the city has grown.
So you had rentals before?
I did, yeah.
And you got rid of them?
Mm-hmm.
What was...
So, it's funny you asked that, because in hindsight, that's one of the lessons that I've learned is just because you think the market is getting toppy doesn't mean you should sell your rental property, because you got to think back to why am I in this? And I'm in this for the income, not the appreciation. So while you might feel that the market is toppy, one thing to think about is market timing stuff. Like no one can really time the market and say this is the top. We could have said that 2 years ago, and yet we're still going up. But also, what matters is the returns metrics when you're looking at rental property. And so if you bought it 5 years ago for a low price, even though you think the market is at its peak, as long as you're generating good returns versus what you invested in it, and the alternative is to put it in the stock market or in the bond market, why pull your capital out? So that's one of the lessons that I learned over time. But yeah, I sold probably about 5 years ago my rental properties at that time, thinking that, okay, I'm not going to get better rent than what I'm getting today, and I'm not going to get better appreciation on the value of the property than what it is today. But I really wish I held on to those properties.
And then today you're investing in more. What are you looking for now?
So the nice thing about Nashville is that when I was investing early on, a lot of the development was the Gulch and here in Midtown. But what I'm seeing now is there are lots of these new pockets that are growing. I mean, who would have thought the Nations would be what it is today? Or Westchester, Houston, right? It's funny because I have friends who were pitching me the Nations probably 5 years ago, and I drove by and I said, I don't get it. Or WeHo for that matter, right? And so,
or East Nashville
or East
for that matter.
Yeah, East Nashville for that matter. And so, having seen what has happened over the last 10 years and how these new pockets are growing, and I think with new companies moving to town, whether it's AllianceBernstein or Amazon, and I think there are going to be more companies coming, there's going to be more demand for housing around the area. The Williamson County thing, you go in the suburbs is one thing, and I think that's for families who have kids and all that. But also, I think that there is a subset of the population, even with kids, who want to live in the city core. Yeah. And so as you identify like new areas that are within driving distance, and if people don't want to drive a full hour from Williamson County to go to downtown, the Nations is a great spot. WeHo is a great spot. East Nashville is a great spot. So that's what got me going again, and seeing the opportunity in those little pockets, little neighborhoods. And honestly, the price points have been pretty good. Even though on the surface you might think, okay, did I miss the run? But once you run the numbers on the returns profiles, the returns are actually not bad in those markets. So so that's why I started looking at it again.
Okay. Are you currently invested in real estate right now?
I am.
You have a couple of rental properties. And
Nations.
Oh, you did back in the Nations. You missed the boat.
I missed the first pop on the Nations, but I think that there are lots of projects coming up there that have good rent yields, and the properties are pretty nice.
Oh yeah.
Are
Definitely.
you looking at 1 bedroom, 2 bedroom, 3 bedroom, multifamily,
Everything.
single family?
I've bought houses. I've bought mostly 2 bedrooms. One thing I learned from owning in the Adelicia and watching the rentals there, the 2 bedrooms generally rent better, is what I've seen. I don't know if you guys would agree with that. I think it's just easier, and I guess the cost per room is just lower. And it just depends also. One of the things that we've looked at in terms of picking places is the demographics that each area attracts, right? I mean, there's a certain demographic that goes to East Nashville.
Yeah.
Different from who goes to the Nations and who goes to WeHo, right? So it's like roommate situations versus families versus a young professional who wants to live alone, so that's probably more the Gulch, right? So that factors into the decision of, am I buying a 2-bedroom or a 4-bedroom house knowing that it's going to be 4 different renters? Yeah. So those are the things that I'm having to think about as I look at different projects.
That's actually a really good point. Yeah.
Do you have any advice for someone who's just trying to get into the rental market?
So I think getting a good realtor is number one. What I've found out is that not every realtor understands the investment property business, and that's been the challenge, is finding someone who will give you ideas and screen and run analyses for you. Because a lot of realtors have the mindset of I'm buying for a person who's going to live in there, right? But knowing the key metrics like your return on invested capital or
what the ARV is.
Yeah, exactly, right? So things like that. So someone who can run that kind of math before they put projects in front of you makes a big difference. So finding the right real estate agent is important. Finding the right lender is important because you need a partner who will help you finance it. And also just drive around and see, get a feel for the different neighborhoods. And the other thing is don't be afraid to go to places that you would not want to live in necessarily.
Right.
Just keep in
Like
mind
the nations 5 years ago.
keep in mind that this is not where you're going to live. This is an investment property. Because if I had that mindset 5 or 10 years ago, I probably wouldn't be working right now. Just because, like you said, the nations, I mean, even Germantown, that's another example where, 10 years ago, you wouldn't want to be driving around Germantown.
Yeah. Right?
And so I think that
No, I mean all
that's
of
where the
Nashville,
opportunity-
outside of downtown, it was just terrifying.
Yeah. So that's where the opportunity is. And I think there are opportunities in areas like Antioch,
Yeah.
Nolensville Road. So as the city grows, right? I mean, we're just going to keep expanding where housing, like good housing, has to be.
Right.
So
Excellent. Thank you so much for coming
course.
on. We really appreciate it. You're going to be back on here. You might just get a chair with us permanently.
I mean, I could put a tiara on. I'll be a property queen. Thank you. No, seriously. Thank
Stockbroker
you.
queen. All right. Well,
Awesome.
thank you for stopping
Yes.
by. Thank you for coming, Brian. We really appreciate you coming and talking with us. Make sure to like, subscribe, comment below, and let us know if you have any questions or business inquiries. Thank you.
Bye.
Bye.
Bye.